Let's look at the 2023 Texas Economic Forecast from the Texas Real Estate Research Center. Economic forecasts are tricky, what with so many state, national, and global variables at play, to say nothing about how devastating weather events such as hurricanes or winter storms can reshuffle the deck mid-year. But using their collective understanding of current economic and market conditions, and by looking at past market trends, the Texas Real Estate Research Center's research team has made some educated guesses for 2023. A few known risks in the near term may impact this forecast, and exactly how these scenarios play out will shift the Texas Real Estate Research Center's expectations. The direction and intensity of the following national and international factors will have a large influence on the Texas economy: China's zero COVID policy and responses to ongoing public protests, which are hampering the global economy; Russia's war against Ukraine, which has disrupted the global grain and energy markets, increases instability across the globe; Europe's energy situation related to Russia's war, which is especially dire and could worsen depending on the severity of winter; the outcome of the Federal Reserve's attempts to control inflation through higher interest rates. With that in mind, here is the Texas Real Estate Research Center's forecast for 2023, given current conditions. Looking at the general economy, inflation will likely stay elevated through 2023. The Federal Reserve continues raising interest rates to attempt to rein in inflation. Even if successful, that success will not likely be reflected immediately and completely. If a recession occurs, consumer prices would fall faster than otherwise due to a lack of consumer demand related to a loss in consumer income. Inflation could be pushed higher if supply constraints from China and Europe increase, or if volatile energy prices are higher than expected. Employment growth will moderate. Employment has increased over the last 18 months because of the recovery from COVID shutdowns. Texas has now more than recovered jobs lost during COVID and has returned to the long-term trend line of employment. Going forward, the state is expected to return to the long-term trend rate of growth. So now let's talk about housing. The mortgage interest rate's annual average will likely be higher in 2023 than it was in 2022. The recent increase in mortgage interest rates has been in response to both high levels of inflation and increases in interest rates from the Federal Reserve to combat inflation. Interest rates will largely follow a similar path as inflation, with similar forecast risk factors. Existing single-family rent and price growth will moderate, with the potential to turn negative on a year-to-year basis. The rapid pace of rent and purchase price appreciation over the last 2 years was never sustainable and would have been forecast to slow even in the absence of other headwinds. Home price growth was largely supported by the fall in interest rates from 2019 through 2021. An increase in the 30-year mortgage interest rate to 7% from the January 2021 low of 2.65% decreases the purchasing power of principal and interest payments by 40%. The same increase to 7% from January 2020 to 3.65% represents a 30% loss of purchasing power. Texas builders and developers have faced similar supply constraints as the rest of the economy over the last few years. This has led to a backlog of under-construction homes that will continue to come to market. Existing home sales will likely be lower in 2023 than they were in 2022. Elevated mortgage rates combined with elevated asking prices will slow sales even as price growth moderates. This has been your 2023 Texas Economic Forecast. If you're thinking about a career in real estate, visit our website, pioneerschoolofrealestate.com, for information about our online courses. Don't forget to like and subscribe.